Welcome to the special interview, and we do have with us Finance Mr. Jayant Sinha, who's smiling, but is that smile? Are you slightly concerned by all that's happening, and especially the noise from China? Something else to blame the Chinese for now?
No, I'm smiling because I think markets have stabilized today. Certainly the Indian market has done reasonably well. I mean, obviously we'd like it to do better, but it's recovered. Despite the fact that China was down again another 7% today, the Nikkei was down 4% as well. But the European markets are doing strongly, and I'm sure the US market will open positively as well.
So the Chinese have now cut rates, which is something you must be hoping that Mr. Rajan's going to do around here, but I'll come to that a little later. What impact is this going to have? And are we starting to see the end of the crisis that seems to be going around the world, or are we still at the beginning points, lots more things about to happen?
You know, I wouldn't call it a crisis, Vikram. Really what is happening is that there are three interlocking forces at work right now in the global economic landscape. Obviously, they touch upon India because we are integrated into the global economy. But really, India is somewhat insulated from these three forces. Let me just describe them to you. First, we do know, and lots of external observers, objective observers have spoken about it, which is that the Chinese economy is genuinely slowing down. They have grown at 9% for 30 years. There is a new normal in China, which may be 6%, 7%, maybe even lower.
Yes, some of us think it could be all the way down to 3% now.
Yes, so that's a very major shift for the global economy. For the Chinese now, instead of growing at 9%, to be growing as slowly as they are. Number one. Number two, the US economy has actually recovered much better than most other economies. The Fed is looking to raise interest rates. When that's going to happen, how fast that's going to happen, is another factor that's roiling the markets right now, and so there's turbulence associated with that. The third factor, and all these three are interlinked, is the fact that commodity prices have declined dramatically because China is slowing, and China was the massive importer of these commodities from Brazil, from Russia, from Saudi Arabia, whether it's oil, whether it's iron ore, whether it is coal. China was a big importer of many of these commodities. So those countries that were commodity exporters are now seeing a severe slowdown. Their currencies are in trouble, and they're being buffeted by all of that. So these three interlocking forces.
And at least two of those forces are potentially good for India. India could well become the fastest large economy in the world, and drop in commodity prices and a drop in oil is theoretically good for us. But a fourth possible thing that some people are talking about is the possibility of a collapse of the bond markets. There is a lot of people have been pumping in lots and lots of money, as you know, central banks around the world. At some point, is that going to go bust? Is another concern that some people have at the back of their mind?
Well, I wouldn't say there's a collapse of the bond market. That wouldn't be accurate to say that.
It's not happened yet, but the possibility of something like that happening.
No, I think really what is actually happening, and one would expect to happen when these three big forces are playing themselves out, which is that asset prices will readjust themselves. Certain prices, whether they're fixed income prices or equity prices or real assets like house, real estate or gold, those prices will readjust relative to these big forces that are playing themselves out. So we have this period of adjustment and readjustment that's going through, and that will naturally create some turbulence in the markets. Now, as I said right at the outset, thankfully we in India are well positioned to get through this turbulence. Our macroeconomic fundamentals are very strong. The economy is recovering nicely. People are very appreciative of our reforms agenda. So we are very well positioned, and as we said yesterday in the media, the Prime Minister, the Finance Minister, both of them have said that this is a really good opportunity for us in India to take advantage of this turbulence and really ensure that we are positioned as the world's fastest growing large economy.
Well, I'll just come to what could be done perhaps more in that direction. But sticking just with China for a minute or two, have you spoken at all to your counterparts in China? The fact that they devalued, is this the start of a bigger my neighbor type, competitive devaluation, which could really hit the global economy, as has happened in the past, whether it's the 30s, whether it was early 90s?
No, you bring up a very good point. We haven't spoken, at least I haven't spoken to my colleagues in China, though I have spoken to a number of experts, both in the markets as well as economists. I don't believe that anyone thinks that this is something where it's going to be those beggar thy neighbor policies of the 1930s. We are all, much wiser than that, I hope now. And there is a sense that the Chinese would like the yuan to become also one of the global reserve currencies, and so they want it to basically be more market determined than it is right now, and that's essentially what they've been saying has been the reason for their devaluation. Those factors are definitely at play. But the reality is that when the yuan comes down and it becomes more market determined, it's going to affect the Indian currency as well, which is essentially what's happening.
So you see the rupee continuing to slide, and perhaps is it a good thing if the rupee continues to slide, because potentially that makes exports more competitive?
Well, the price setting,
of
the Indian rupee relative to other currencies is really a function of two things. One, inflation differentials across markets, and number two, the GDP growth rate and the productivity improvements in the underlying Indian economy. So those are the forces that will determine where India nets out. Now, obviously, if our competitors, China and other countries, are seeing a situation where their currencies are declining in value relative to the US dollar, then in terms of competitiveness, we obviously have to follow suit to some extent, and the market will enable that to happen as well, so that the rupee becomes more competitive.
But just to come back to one of the themes that you touched upon, which I would like to dwell on for some time, is the possibility that this could have been a really sweet spot for India. Might well be still, but if you look around the world, China is in trouble, Japan, there are issues, Europe is in trouble, okay, the US is strong, but this could have mean India's big moment, in the sun, on the stage, in the spotlight. It's the fastest growing large economy in the world, sort of a thing. Are we doing enough to make sure that that story plays itself out? There could have been bigger reforms. We could have been sitting right now having passed the GST with a bigger smile on your face.
It is India's moment, Vikram, and I think we are seizing the moment. You're quite right. If we did not have the mindless negativity of the Congress, and if we had GST passed by now, we could have done even better in terms of capturing this moment and being well positioned. We are still very hopeful of that. We'll keep trying our level best to make that to happen. But with respect to let
me just press the pause button on that for a minute. So are we going to see a special session for pushing the GST through or no?
We are exploring all possible alternatives. Let's see, what happens.
So you're not ruling it out, in other words?
Obviously the fact that we had Parliament sort of sine die adjourned as opposed to prorogued ensures that alternative is still on the table.
Okay, so that alternative is on the table, but you haven't made up your mind as to whether you're going to do that or not.
No, we'll have
Although
to see.
It is important to get the GST through.
No, it's extraordinarily important for India. And which is why, the willful obstructionism of the Congress relative to GST, something that they themselves had introduced in 2006, and that, is an economic reform measure which is truly transformational, which will be the biggest revolution in taxation in India since independence. To willfully obstruct that in this manner and to really, keep the country hostage to whatever the political agenda is, I think is really been quite tragic for the country.
Some would also wonder whether your priorities are completely correct. You spent a lot of political capital on the land bill, which was always something which is going to be very difficult to do, and then you had to backtrack and you've pretty much gone back to the UPA version. You could have just said GST is going to be the big priority and not land.
India is a big country, Vikram, so we have to have a number of priorities. Skill India is a priority, Make in India is a priority, land reform is a priority, GST is a priority, and we are trying to advance all of them. And, obviously our sense is that for each of the ones that are really, really important in terms of the economy and in terms of what it means for Indians, whether it's land reform, whether it's GST, that we have a durable, enduring national consensus around that. With the land bill, our thinking was initially that we did have a national consensus in the summer of 2014. That's what seemed to be emerging. Unfortunately, the national consensus did not carry forward. So we had to obviously adjust to those circumstances. With GST, there is in fact a national consensus. The states are fully in support. It's just the mindless negativity of a few people in the Congress that's preventing it from being passed, which is as I said, truly unfortunate.
So getting bills through in Parliament, we know is going to be difficult. It's always been difficult, and it seems to be becoming virtually impossible. But there are other things which are largely in your hands, which you could do entirely if you want to. Take, for example, this entire question of the row around MAT. I mean, all you have to say is that, yes, we are going to be accepting the Shah, what the Shah report is on MAT, and you could be well having a surge of positive emotion, and certainly from the FIs.
And we are absolutely moving forward on all of those issues in a considered, deliberate manner. Obviously, with respect to prospectively fixing that problem, we did it swiftly through the finance bill and the budget. The retrospective aspect of it, which is sub judice, is part of a complicated legal process, and which is why we've asked the Shah Committee to give us their legal expert opinion on how best to deal with that. We've got their first
recommendation.
We've got their first draft. We are favorably considering it. There are some legal nuances that we have to work through because there are a whole host of cases that have been filed. It's before the Supreme Court as well. So as soon as we can get all of the legal issues tied up nicely, we'll take action.
So, but I think I'll pick on the words that you used. You're favorably considering it.
We are favorably considering it.
Okay, you're favorably considering that. That is something which I'm sure a lot of people will be happy to hear. The other issue, of course, if you ask actually a bunch of investors, and they might all be looking at India right now for the reasons that you said, that there are a lot of factors that are playing out in India's favor. And just the collapse in commodity prices means that actually India becomes a very attractive country, certainly. A lot of them still have the concerns about areas like tax terrorism, which was a real issue 2-3 years back. You had come into power saying we are going to do something about it. But people still aren't convinced because they're still seeing many of those same officers there. They're still not sure whether India has taken back the policy of tax terrorism once and for all.
Global businesses and investors and Indian businesses and investors are very excited about the government's reform agenda, whether it is Make in India, Skill India, what we're doing with respect to the domestic venture capital industry, what we're doing with alternative investment funds, the National Infrastructure Fund, the reforms in banking, the manner in which we've tackled NPAs. People are really excited about the range and scope of our reform measures. And with respect to your specific question...
You're absolutely correct. They're excited about all of that, but they're saying, how is all of that going to help if there's any level of regulatory uncertainty or tax uncertainty?
So let's come and then
because we can't price in tax.
So let me come to this issue of tax. As far as tax is concerned, I think we've demonstrated through our actions. For instance, the manner in which we dealt with MAT very lawfully and with due process, both prospectively and retrospectively. The manner in which we are dealing with some of the transfer pricing cases, all of those, I think, and the fact that we've signaled very clearly that we're going to drop corporate tax rates from 30% to 25%, while at the same time removing a lot of the exemptions which were just engendering a tremendous number of sort of cases and litigation and all of that. So we've clearly demonstrated through what we're doing as far as tax policy is concerned that we want a fair, predictable, simple tax regime, and we are doing that. Now, I also want to explain one thing that you brought up. You said the same people are still there. That's not true. In fact, the kind of transfers and wholesale movement of people that we've done through the system is precisely to change the manner in which the tax authorities were sort of entrenched, and to ensure that there was fresh thinking and sort of a revitalized tax system across the board, both as far as direct taxes are concerned as well as indirect taxes are concerned. So we've moved a lot of people around simply to ensure that we are getting rid of some of the entrenched people, and we're bringing fresh thinking to bear.
So you will bring in.
We've already done that, Vikram.
All right, but to the extent that, but that's a clear signal that you're giving, that is a directive that has gone down from this government to its officials all the way down, that you should not carry on those policies of adversarial, Inspector Raj, that
absolutely,
type of
absolutely. In fact, just yesterday, the Honorable Finance Minister addressed the Chief Commissioners of the Central Board of Excise and Customs, all the indirect tax authorities. I met with them today. The Revenue Secretary spoke to them yesterday as well. And one of the major themes that we've been emphasizing, which they are embracing, of course, is the fact that they have to really view themselves as being taxpayer friendly, that their goal is to be able to provide a fair, predictable, stable tax regime, and they really do want to follow through on that, and we are committed to that.
Right. Your life would be much simpler, and the Indian economy may well be, and certainly the stock markets would be much happier if we actually did have that interest rate cut. So you are no doubt talking to Governor Rajan to say, when are you thinking about doing it?
We are, I think, in a favorable environment when it comes to lower rates, but that decision is made by the Reserve Bank of India governor, and of course, as he said many times, that is going to be determined by some of the data that he's considering and evaluating right now. So we'll have to wait for that.
I mean, actually, it's his decision. But if I was to just look at the data, you'd see inflation obviously with a big concern, and he's very said it repeatedly. He wants to stamp out inflation. But actually, we have negative wholesale inflation right now, and even consumer price index is under control. So perhaps the balance is now shifting towards the very urgent need for a rate cut? I mean, do you...
Well, part of the reason why India is such an attractive economy right now is because our institutions are strong, they're robust, and they're independent. The fact that we have such an eminent economist, such a well-regarded person as the governor of the Central Bank of India, who is able to apply independent professional judgment on these issues and then, take the decision as and when he thinks appropriate. And that sets up a healthy and constructive tension between Ministry of Finance and the Reserve Bank of India, is actually part of what makes India such an attractive economy, because our institutions are so robust.
But if I could decode all of that, behind all of that, is there a message that you're dying to say, but perhaps struggling as to how quite to say it? Please cut rates, Mr. Rajan.
No, I am saying very simply, it is in his good hands. Let's wait for him to make up his mind.
All right. So just looking ahead in the immediate future, before I end, yesterday, of course, you did go ahead with the sale of some of the IOC assets that you had to do, the OFS out there. Do you think perhaps that was well timed? Because if some liquidity hadn't been sucked out of the market, maybe we wouldn't have seen a 1,600-point drop.
The reality is you can't time the markets, Vikram. I mean, I think that's a mug's game. Let's not even try that. We are a deliberate government. We are a responsible government. We know what we have to do, and we have our timetable, and we'll proceed on that basis. The very fact that we were able to do such a large OFS and do it successfully and be 1.18 times subscribed for that tells you the depth, the liquidity, and the attractiveness of Indian equity markets right now. So I think all of those are reassuring signals. Again, as I said, our fundamentals are very sound. We have a very, I think, a forward-looking and progressive reform agenda, which we're moving forward on. There are many initiatives that are in play right now, many more still to come. And if we can get GST through, and our colleagues in the opposition would be willing to work with us on that, then I think we'll be able to really boost the economy some more.
But obviously you can't predict what's going to happen with the Sensex, nobody can. But your overall take on where the markets are, the rupee is, the Indian economy is, your final sort of overall message on that?
It's very much the philosophy of the Gita, right, Vikram, which is that we have to do what we have to do. Apna karam karenge. और जो आगे होगा वो देखा जाएगा. So that's kind of the mindset, which is we really have to make sure the Indian economy is globally competitive and is innovation driven in the long run. If we get those fundamentals right, then good things will happen.
Especially if you get the ease of business up, because
indeed.
Are you finding it tougher than you thought?
No,
making India an easier place to do business, because that remains the big issue.
It is a challenge for sure. I mean, certainly the fact that we were ranked 142nd is very depressing. Hopefully we'll be able to move that forward, and we must, and it's vitally important that we do so. But there are layers and layers and layers of bureaucracy in India. Things at the central level that could be done, we've done fairly rapidly. Those that have to be done at the state level take a lot longer. Then there are things that you have to do at the municipal level as well. So that whole process, the whole sort of ship of the state and the bureaucracy has to move forward.
Of course, you also must be worrying a bit as to why infrastructure, spending is not really taking up. A lot of Indian companies are heavily indebted. In this sort of an environment, raising capital funds may not be necessarily very easy. So where is that private investment push going to come from?
We are not at all.
You have to come back to a government push.
No, we are not at all surprised about that, because the reality is that at this point in the economic cycle, where we've gone through a macroeconomic stabilization program like we have with tight monetary policy, fiscal compression, working on structural reforms and so on. As the cycle picks up, with the government public investment happening at accelerated levels like it is at the 38% higher rate right now, it takes time for private investment to come in. So we are not expecting it to happen right now. Certainly in the next 6 to 9 months, we believe that will then happen, because consumption is picking up quite nicely.
All right, so if you were still in the fund manager mode, you would say time to buy in India, basically.
I think India is a very attractive economy right now.
All right, thank you so much.
You're welcome.